Good morning, everyone. Miss M here. Welcome back to another lesson at Brightstar's Learning Academy. Today, we are going to prepare the statement of comprehensive income. So this side here is the question paper that we are going to treat, and the other side is your answer book. So I took this. This is exactly from the answer book that you will be provided when doing an exercise or writing your exam. Right, let's get started. Question 2, statement of comprehensive income. This is 44 marks. You are supposed to complete this exercise within 35 minutes. We are dealing with the books of Sebenza Traders. The following information was taken from the records of Sebenza Traders on the 28th of February 2023. Now, this is our financial year end. It simply means that our recordings, or when we record the transaction, we will record the transaction which occurred from the 1st of March 2022 up until the 28th of February 2023. The business uses a markup of 40% on cost. Now, what does this mean? It means that when you go to the shop as the owner, when Sebenza go to their supplier to buy the stock, it will represent the cost price that they buy the stock with will represent the 100%. Then when they come back, they will add a profit of 40%. Therefore, sell their goods for 140%. You are required to prepare the statement of comprehensive income, or the income statement, for the year ending 28 February 2023. This is question 2, statement of comprehensive income of Sebenza Traders for the year ended 28 February 2023. This information here is very much important. You need to indicate which statement you are preparing for which business and for which year. Right, here you are given the information extract from the trial balance for the year ending 28 February 2023, last day of the financial year end. Balance sheet account, you have all your accounts which affect your balance sheet, and then on the debit side will be your assets, the credit side are your liabilities. And from your nominal section account will be all the accounts that are going to affect your income statement. Debit side will represent all your expenses. Then your credit side will represent all your incomes. Right. Here are the adjustment and additional information. You can just go through it so you will know which accounts are affected or they will need to be adjusted. We have water and electricity. The stock with a selling price of 2,520 was donated. It's a donation. According to physical stock count at year end, you have your trading stock and packing material. You have insurance. You have the rent for February 2023 has not yet been received. So this will affect your rent income. A debtor, obviously bad debts, or we'll hear from the information when we are dealing with the bad debts. The loan statement received from SSAB Bank, we're going to use this information when you calculate your interest expense. Provide for outstanding interest on fixed deposit. This one will affect your interest income in the income statement. Your bank statement for February reflect the following. These are your bank charges, but the interest on current account is your interest income. Then we have depreciation. That's it. What I was doing here, I was just going through the paper so I will know when I'm going to do, let's say, insurance. I already know I can just take the amount and transfer it to the income statement. I will have to check first the additional information regarding insurance and then adjust the amount, then record the correct one. Right, let's get started. We will start with our sales. From the information given in the nominal section account, the sales figure is 588,000. But we already know that if we do have any sales return from the customers, that is debtors allowances. It should be taken out from the sales figure. So here we have debtors allowances of 6.8 that we need to deduct from our sales account. The net sales will be 588,000 minus the 6,800. It will give us 581,200. The cost of sales is how much? 420,000. From here, how do we calculate the gross profit? We will take our sales and less what? The cost of sales. We get 161,200, which is your gross profit, right? We are done with the first part. Let's continue with the other one, other operating income. From the other operating income, already you were given the commission income of 10,150. This simply means the commission income does not have any additional information. You don't have to do anything about it. Then we will check the second income that is in our nominal section account. Here we have commission income, rent income, and the interest on fixed deposit. And I've already explained that the interest on fixed deposit are recorded at the end of the income statement, the interest income and the interest expenses. All right, the next account that we're going to record is our rent income. The rent income, we are given how much? 36,200. Now let us go and look at the additional information relating to the rent income. Here it is. It says that the rent for February 2023 has not yet been received. This is accrued income. Okay, so the rent was increased by 300 per month with effect from the 1st of July 2022, right? How much is the rent for February 2023? We don't know because we are not given the base. We only know that the rent has increased by 300 rand per month from July. We'll do our first calculation here. Right, we are given 36,200. Now this 36,200 we need to deduct the increase of 300 for how many months? The increase started from July, August, September, October, November, December, January. That is 7 months. I will not include February because we haven't received the rent yet. So this is only for 7 months. We're going to say 300 by 7 months. It gave us 2.1. We need to deduct that from, we need to deduct this amount from the amount given in our trial balance so that we will know how much was the rent income before the increase. Now this rent income before the increase is for how many months? It's for 11 months. Then for us to know how much was the rent per month without the increase, this is rent per month without the increase. We'll say 34,100 divide by the number of months, 11 months that we receive the rent. It means the rent per month was how much? 3,100. But we know that there must be the increase that should be added to this. The increase of how much? 300. Therefore, our rent for February is the rent without the increase plus the increase. It will give us the 3.4. Therefore, we need to add the 3.4 to the figure given or to the amount given in our adjustment. Right, that is 39,600. We are done with the incomes that we have. Therefore, we need to add both incomes. You can see they are inside the box, right? We're going to add both income and then the answer will be written above. It's 49,750. Right. So how do we go about calculating the gross operating income? This amount here, it's your gross profit plus other operating income. It will give you the gross operating income. We are done with the second part. Now we are going to deal with the expenses, right? Salaries, stationery, and advertising was already given to you. This amount are exactly the same as the one from the pre-adjustment trial balance. They have no adjustment, so we can continue and do the rest. Right, salaries is given. We'll start with the insurance. How much is the insurance amount given? 12,500 rand. Now let us go and look for the information regarding the insurance premium. Insurance include an annual premium. When they say annual, it means it's for 12 months of 3,960 paid for the period of 1 September 2022 to 31 August 2023. Right, what does this mean? Remember, our financial year end at the 28th of February 2023. Anything beyond is prepaid expense. Therefore, we need to deduct this amount from the amount given in our pre-adjustment trial balance. Then how do we go about calculating it? Our second calculation will be insurance, and you are given 3960, which is for the full year. So how much are we supposed to deduct from this? Anything beyond the financial year end. Our financial year end at the 28th of February, meaning from March, April, May, June, July, August, that is 6 months, should be deducted from that amount. By 6 over 12, it will give us the 1980. This 1980 is for the next financial year, therefore need to be deducted from our income statement for the current financial year. Right, we are done with the insurance, and then the next one is bad debts. And then on the bad debts, we are given how much in the income statement? 4.8. Let us go look at the adjustment relating to the bad debts. Here's the one. It says R. Adam, a debtor who owed 1.2 to Sebenza Traders, was declared insolvent. His estate was able to settle half the amount owing, write off the outstanding. So out of the 1.2, 600 was settled. We have to now write off how much? The 600 that is remaining. Half of 1.2 is 600, and therefore we are going to add our bad debts with the 600. Right, we are done with this one. We're moving on to the next transaction. Stationery. Stationery was already given, if I remember correctly. Yes. And then we don't do nothing with it. We'll record the water and electricity. Electricity. Water and electricity, the amount given is 19,100. The first adjustment relates to the water and electricity account. It says the water and electricity account for February 2023, last month before the financial year end, has not yet been paid. So what does this mean? It's an accrued. We have accrued expense here. Therefore, what are we going to do with this amount? Remember, we need to record in the income statement all the expense for the 12-month period from 1st of March 2022 until the 28th of February 2023. Therefore, whether it's paid or not, we need to also include that amount. 19,100 by 1830. Right. We are done with the water and electricity. We go to the bank charges. You can see that I'm taking this line item by line item so you don't leave anything behind. And whichever transaction that you dealt with under the additional information, you need to highlight that, put a tick maybe, just to show that you are done with this adjustment, so you won't skip anything. Right, the bank charges given in our pre-adjustment trial balance is 4,200. Let us go look at the information relating the bank charges here. Right, the bank statement for February 2023 reflects the following. EFT fees, we have fees for how much? For 170, we need to include that. And then we also have fees of how much? 90, that must be included. While starting with the exercise, I've explained that the interest on current account is not the bank charges. This is your interest income and will be recorded at the end of the income statement somewhere here. Therefore, when we do the interest income, we should not forget to add this one also, right? Done. Then let's look at the other exercise. We have the packing material. Packing material represent the packing material that was used in the current financial year. In our books, it shows that we have used how much? Oh, I'm sorry. I'm typing. We've used the 7.1, but then additional information which relates to the packing material, it's here. We do have that one here. It says, according to the physical stock count at year end, the following items were on hand. The trading stock, 41,000. Packing material, 1950. What does this mean? It simply means that we thought in the current financial year we have used 7.1, hence recorded in our books, but in the essence we are still left with 1950 in the warehouse or the storeroom. Therefore, we need to deduct the 1950 from the packing material so that this will represent the amount which was actually used for the packing material in the current financial year. Right, the correct amount is 5150. We are done with packing material. Advertising is here. It was already recorded or given to you. Then we'll skip that one. Interest on fixed deposit, I already told you interest income and interest expenses are recorded separately at the end of the income statement. So we'll come back to this when we do the interest income. Right, now let us look here. If you can check from the nominal account section, I went through all these items, also taking into account their affected adjustment or from the additional information. Now, when we are done, it doesn't mean you are done with the exercise. You have to now go back to your adjustment and see if you have any other transaction that you need to record in your income statement, but not given in your nominal section account. Right. This one is not highlighted. It means we haven't dealt with it yet. Now let's start with it. It says the stock with a selling price of 2,520 was donated to a local orphanage. No entry was made. Right. When we donate or when the business donates the stock to a local orphanage, they should not record the stock at their selling price because we're not receiving anything for it. Therefore, the stock donated, the donation must be recorded. Must be recorded at its cost price. I hope it makes sense, right? So we need to deduct the trading stock account, or we need to remove this amount at its cost and not the selling price. Now, how do we go about calculating the cost price of donation? Our next item here will be donation. Our next calculation will be for donation. With the donation, we are given the selling price. We are given the selling price of 2520 here. And then how do we calculate the cost price? At the beginning of the exercise, you were told that the business uses a markup of 40% on cost. And I said the cost price represents 100%. Profit is 40, selling price is 140. Therefore, it means that the donation was recorded, or was not even recorded, was done or was recognized at 140. But we know that we should record this at its cost price, which is 100. How do we go about doing that? I will say multiply by what I want, which is the formula that we're going to use throughout all these exercises. Divide by what I want, divide, okay. What I want, divide by what I have. Right, what is this? What is it that you want? Looking at this formula here, we want the 100, and then what is it that you have? The selling price of how much, or which represent the 140%. Then the calculation will say 2520 times what I want divide by what I have. It will give you the cost price of the goods donated to a local orphanage. Then you will record donation as an expense for how much? 1,800. Let me just quickly, yes, it's 1,800. I hope this is clear. And then let's look at another transaction. According to this one here, according to the physical stock count on the 28th of February 2023, the following items were on hand. Right, we have the trading stock, we are done with the packing material. How do we go about calculating what does this mean? In our books, we have recorded that we have the trading stock worth 44,000. Let me do the calculation here for trading stock. I don't know if we have the deficit or the surplus yet. Now here's where we're gonna do the calculation. It's the trading stock, and then okay, no, it's fine. We will say we are given in the trial balance, the balance of the trading stock is 44,000, but from the 44,000, remember we have donation which was not recorded. You see, no entry was made. So before we can do anything, we need to deduct the 2.1 for donation. Then we are left with the 41,900. Oh no, I'm sorry, it's not 2.1, it's 1.8. Sorry about that. It's 1.8. This one here, the one we just calculated above. So we are left with 45,000. No, it's minus 1.8. We are left with 42,200. In the pre-adjustment trial balance, we are given 44,000, but the donation was not recorded. We need to record that one first. Therefore, in the books, we have 42,200. But when we do the physical stock count, we realize that the balance for trading stock is how much? 41,000 and not 42,200. This simply means we need to take down our books to 41,000. Whenever we're taking down the value of the stock, it means it's a loss and therefore a deficit. You compare the two amounts. It was 42,200. We thought we have 42,200, but then when we do the physical stock count, we then realize that it's only 41,000. Then we need to adjust our books or the value of the trading stock to 41,000. Therefore, this is a loss. Hence, we have the trading stock deficit of how much? We will say 42 minus 41,000 is 1.2. Then in the income statement, we are going to record the trading stock deficit of how much? 1,200. Guys, you can see that there is no trading stock deficit in your nominal account section. When you start with the exercise, the moment I see vehicles accumulated depreciation at the beginning of the year, I already know that I need to calculate the depreciation for the current financial year, which will not be given in your nominal account section, right? So you should be on the lookout for that. Right, we are here. This one, the loan, we said is going to affect our interest expense. Then not gonna recognize it for now. Provide the outstanding interest on deposit, interest income, not now. Then we have last one is the depreciation. Right? Okay, then we have the adjustment for depreciation here. It says the depreciation is calculated as follows. On vehicles at 10% per annum on cost. What does this mean? We are going to calculate the depreciation on vehicles using the straight line method or the cost price method or the fixed method. On equipment at 15% per annum on diminishing balance method. This one we are going to calculate the depreciation 15% on the carrying amount of the asset. We'll take the cost minus the accumulated depreciation, and then you get the carrying value. You multiply that by the rate before you get your depreciation for the current year. Then additional information, equipment with a cost price of 12.4 was purchased during the year. This transaction was not recorded, right? You can see that they have given you the different method and also the depreciation rate to calculate vehicles and the equipment. So we can start with the first one, depreciation on vehicle. They said it's on cost. How do we calculate? What is the formula for calculating depreciation if we're using the straight line method or the cost price method? We'll take the cost price, you multiply that by the depreciation rate to get your depreciation for the year. Now, what is the cost price of vehicles? We go to the trial balance, and here it is, 280,000. Now, from 280,000, the depreciation rate, they said it's how much? 10% per annum. So we'll say 280 times 10 divided by 100. This is 10%. Therefore, our depreciation on vehicles will be 28,000. That I will then immediately after calculating record that here. Then we are not done here. We still need to record the depreciation for equipment. Second one is the depreciation on equipment. All right, sorry. It's the depreciation on equipment. How do we go about calculating the depreciation on equipment? We use the diminishing balance method. Therefore, this is going to be different as the one we calculated above. We are going to take our cost price. You deduct the accumulated depreciation to get the carrying value of an asset. And then we'll take the carrying value by the depreciation rate and then the period. The reason why now I'm including the period is because I've seen here that there is a new one bought during the current financial year. So by the period to get your depreciation for current year. Okay, right, let us go to our trial balance to check the cost price on equipment. Right, this is the trial balance and the cost price of equipment here is 130. So I will take 130. What is the accumulated depreciation on this equipment? at the beginning of 2022 is 44,600. I will deduct that 44,600 to get our carrying amount of 130,000. Then we deduct the 44,600 to get the carrying value, which is 85,400. From the carrying value, they said the depreciation rate is how much? 15%. It's here per annum. So I will record 15%. And this equipment, remember, is the old one. Why did I not exclude this one? Is because they said the transaction was not recorded, meaning in the trial balance, all these balances that I'm working on are for the old equipment, not the new one. Yeah, this is not here, guys. Right. So it means it has been in the business for the whole 12 months. All right. The depreciation will be 85,000 by 15 over 100 by this one, the period. We have 12,810. Now this is the depreciation. This is the depreciation on the old equipment. 12,000, how much? 12,810. That we need to add it to the depreciation account in the income statement. 12,810. Then we are now going to calculate the last one, depreciation on the new is the depreciation on the new equipment. Right, same formulas will apply, so I will just copy all this. Right, the formula for calculating the depreciation on the new equipment will take the cost price of an asset minus accumulated depreciation to get the carrying value. From the carrying value, we'll multiply that by the depreciation rate, the period depreciation for the current year. Now let's go do that. What is the cost price of the new equipment bought? Is 12,400. Do we have the accumulated depreciation on this? No. Why? Because this is still new. We haven't calculated any depreciation on this yet. This is the first time calculating the depreciation. Therefore, the cost price will be the same as your carrying amount. The depreciation rate is the same as 15%. Now, when did they buy this asset? Period. It was bought on the 1st of December 2022. This means that we need to calculate the depreciation on this new equipment from the December month, January, February. That is 3 out of 12. Oh. The depreciation is 1860. Oh, no. It can be correct. It's 12,400, 15% for 3 months. And then let's calculate the depreciation. We'll take this one by 15 over 100 by 3 out of 12. It will give us the 465. Yes, this one is correct. Please verify with your calculators when you do this exercise as well. It's 465. Then the total depreciation for the year for all these assets is how much? 28,000 plus 12,810 plus the 465, 41,275. Then we are done with the, if you can check here, we are done with all the, let me highlight this as well. Oh, it's highlighted, guys, you can see that, right? Okay, we are done recording all our operating expenses. So you need to add every expense that you have recorded, and then you put the total amount here. The amount for sorry, we are going to say, sorry about that, the amount for right. So if you can add all your other operating expenses, this is your salary, stationery, advertising, and everything that we have recorded up until the depreciation, you will get the 139,855. Then we are done with our other expenses. How do we calculate the operating profit? We will take this amount, gross operating income, and you deduct the 139,855. Therefore, our operating profit is 71,095. We are done with other operating expense section. Then now we are going to record the interest income, right? Now the interest income, let's look at our nominal section account. We have the interest on fixed deposit of how much? 1620. And then we need to add anything that we've left here, right? We have the interest on the current account of how much? 220. Then the other transaction that affect our interest income is this one here. It says that provide for outstanding interest on fixed deposit. Interest is not capitalized. Interest is not added to the balance of the investment. So let's do the calculation here. The interest on fixed deposit, right? Our fixed deposit cost is how much? We'll go and check in the trial balance, in the nominal account, in the balance sheet section. In the balance sheet section, we have a fixed deposit done at AI Raji Bank, 9% per annum, 24,000. It's 24,000, and the interest per annum. Interest per annum, they said is how much? 9%. Then how much is the interest on this fixed deposit? We are going to take this by 9 over 100. It will give us the 2160. We have already received how much? 1620. This one here, you see the interest on fixed deposit in per annum we should earn 2160, but here we've already earned or received the 1620, so we need to see how much is remaining. Then we'll take this one minus the one already, so we are left with 540 that we still need to receive. Then we're going to add 540 here. Then the total interest income will be your 1620 plus the 220 plus the 540. Sorry about that. Is 2380. Then we are done with the interest income, right? So when you take your operating profit plus the interest income, will give you the 73,475, which is your profit before the interest expense. Now we are doing the interest. Now we are doing the interest expense, right? This is the transaction that will affect our interest expense. It says on the 1st of March 2022, the loan amount is 150. the loan statement received from SAA Bank at the end of the year. It says the loan amount is 150. Repayments made during the current year, including the interest. When we make payment, we pay the capital amount portion of the loan plus the interest. It's 46,200. The loan interest on loan capitalized, we don't know how much that is, and capitalized simply mean that when we calculate this loan, it will be added to the outstanding balance of the loan. Balance on the 28th of February 2023 is how much? 117,300. So if you can do your T account, guys, you will open your T account. On the debit side, you will record your closing balance, and also it reduces with the repayment. The repayment will reduce that balance of your loan. Then on the debit side will be, on the credit side, will be your opening balance. Credit side, opening balance. Debit side will be 46,200, your repayments, and the closing balance. Then we can simply do this without doing the T accounts by saying 117,300 everything on the debit side plus 46,200. Then we will deduct everything on the credit side, which is your opening balance 150,000. Anything remaining will be your 117,300 plus 46,200 minus 150,000. It will be your interest expense, right? So this interest expense, if you were to do the T account or fill in the T account, the amount missing will be on your credit side, meaning that will represent your amount for the interest, which will be capitalized to the balance of the loan. So we are almost done. Going to say this minus 13,500, sorry. So we are going to say this minus the interest expense to get our net profit for the year, 59,975. Happy? We are done with our exercise. We are done preparing the income statement, and then we have a net profit for the year of 59,975. And then we're done with the calculations. And guys, this the calculations that I did here, these are not for practicing session. Even when you do the exercise, you need to show your calculations so that you can get more marks on this, right? So until next time, I think we will be doing the balance sheet. We'll be preparing the balance sheet of a sole trader in our next lesson. So stay tuned in, and please don't forget to check our first video where we have explained the purpose of the statement that we are preparing, the layout as well, the items reported in each statement, what does each account mean, so that you will have the background knowledge when you are dealing with these exercises. Until next time, ciao.